Good morning, traders. Good morning, fellow traders from every part of the world that you're joining this from. My name is Kefa Eric, your market analyst here at HFM, your broker in Kenya and beyond. Now, I hope most, if not all of you, are having a good time on the financial markets. But before we proceed, I'd like to bring it to your attention that this is going to be a pre-recorded YouTube video. Kindly find it at HFM YouTube channel at HFM Kenya. I repeat, kindly find it at in YouTube at HFM YouTube channel at HFM Kenya. Like, subscribe, and click on the notification button so that you are not left out in future content that we upload regularly. So I'll give a moment of silence because my analytics from my end are telling me more than actually slightly above half of people watching the content at HFM YouTube channel at HFM Kenya not subscribed or liked. So I'll give a 3-second moment of silence to allow you subscribe, like, and click on the notification button. Like literally, I'm waiting. Nice. So we could proceed. Thank you. So from an economic data point of view, today we are on Friday. Let's see what happened yesterday. Yesterday we had unemployment rates in Australia affecting the AUD, which came out flat. Previous was 4.1%, consensus was 4.1%, and the actual was 4.1%. Moving on swiftly to have a clear view of the labor markets in Australia, we see unemployment change. Previous was 50. Okay. Previous was 61.3%. I see it was revised from 64.1K, but the previous employment change was 61.3K%. The one that was predicted or consensus was 2.5 or 25K. But the actual one which came out was 15K, so we see it is lower than expected. What does that mean? Weakening the Australian dollar. So for Australian dollar pairs, for example, AUD USD, we shall see it being in a much more dovish or bearish or a downtrend because of the weakening of that data, which has been the case for quite some time now, supporting the narrative. For USD, we had producer or PPI come out. PPI was high, strengthening the US dollar slightly. We see that the US dollar has been strengthening in its power and ability for quite some time now. Then we had Fed's chair Jerome Powell's speech. This was a follow-up from what happened last week. Not so much, just to review the economy of the US, where it is right now. Is it doing good? Is it doing bad? How do they do that? Through one, ensuring proper inflation. They like it at 2%. And number two, ensuring favorable employment or labor markets to make sure more people are employed, which is good. Yes, then we had in British England, we had Bank of England's governor's speech. That was also a follow-up, which is good. In China, the Chinese market, the Chinese is the manufacturer of the world, which means although we might not be super interested in trading Chinese-based pairs, currency pairs, but we tend to take a look at what China are doing because they're kind of a balance of power in the international space. So we had retail sales, which contributes to their inflation, which came out at 4.8, higher than expected. So if they're doing good, we shall see other countries trying to emulate to keep up with that pace. Then we had retail sale from the US. Retail sale from the US. This is coming out today. Okay. So as it stands, those are the economic data. So how do we summarize it? The US dollar is doing good. The AUD is doing fairly, is struggling. The others are for next week. So let me share another screen so that we are able to observe other markets. Just a minute, just a minute, just a minute. Very nice. So beginning with the usual suspects for US dollar, Euro USD, we see it in a clear downward trajectory. We see it kind of reacting from a key area of interest here at 1.05, 1119. We see it's kind of retracing. Let's see on a lower time frame what that is all about. Much more lower time frame. Nice. Retracements are good because they enable you, if it's in a downtrend, to sell at a premium. So reacting from areas of interest like the 1.05990 would be an awesome opportunity. But since it has come up to 50% of the retracement, it would be safer to now try to look for sales in that particular asset. A similar scenario we might likely to see on GU. It's also reacting, kind of reacting from an area of interest here at 1.26050. Remember, guys, the US dollar right now is doing good. So if the US dollar is doing good, what will we see in US dollar? Quote currencies, it will be in a downward trajectory. For US dollar based currency, we shall see it try to move up. So here we see a reaction about around the 1.26064. And from a lower time frame, we see it is trying to retrace. Beautiful opportunity to get in for intraday trades for shorts. AUD USD. AUD USD has broken the 0.64644 area of interest or support, if you may like, which automatically turns it to be a resistance. It would be a good opportunity to consider enjoying that move to the downside now that we know the AUD is struggling from the reflection of the labor markets data, which came out yesterday, suggesting a struggling Australian labor market, which weakens AUD. For US dollar based currencies, it will be moving in an upward trajectory. Here we see a consolidation for quite some time. Move to a much more lower time frame to see clearly what it's doing. We see it's spraying around the area of interest around 0.88893. Would like to see it come in close above to confirm our bias. Then we could get in for the buys, but where it is right now, understanding that the US dollar is doing greater than the JPY, which reminds me the Japanese GDP data came out, and which shows the Japanese economy is struggling. It came out lower than expected, which would indicate a stronger USD and a weaker Japanese. So definitely we will see it come in print price to the upside. That would be an educated speculation. For USD CAD, this particular asset has been obeying fundamental analysis to its large to quite high extent. We see it trading high. Would like to see it trading even much more higher, anticipating it to touch former area of interest. Like here, we had indicated closing above the 1.39777. That's exactly what it did. It would be kind of conservative to wait for a little bit of retracement so that to keep on buying to the upside. For GJ, Great British Pound against the JPY, it's still at the zone we were looking at yesterday. Remember yesterday we said we wanted to see this particular high come and take out this low for us to confirm if it's going down. That failed. Now we want to see this low take out that high which failed to take out the previous low, to suggest that price will keep moving to the upside. So when price comes and closes above the 198.488, it would be nice to consider riding the trend to the upside, now that we have actually clear indication that the Japanese yen economy is struggling. So we would to take advantage of the Great British Pound. You see, like right now, it's clearly indicating it is dovish at negative 0.05%, showing that we are in a little bit of consolidation. So it would be important to wait for it to come close above the 198.5 or 4 to confirm the fundamental analysis sentiments or indications. It's a good Friday, retail traders. It is a good Friday. So moving on to gold. Gold came and closed below the 2547.94 support. Right now it is in some sort of retracement. So when this particular high take out this low, you might consider getting into the recorrection that has been happening from 10th 31 this year, that is from October, to continue riding price to the downside. Remember guys, to observe risk management when you are getting into these particular trades, and to trade with a reliable broker. HFM is a regulated broker here in Kenya and the other countries that we are putting our footprints in, with the aim of giving our clients a good experience in the financial market. So I've been sharing the charts all along. So okay, so guys, that is it for today. See you tomorrow, the same place, the same time. And if you missed this daily morning market call, we will be sharing the link on our social media platforms and groups. Kindly consider to click like and subscribe so that you are at par with unveiling economic turbulences. Before then, by any chance, this is not financial advice. This is meant for informative purposes. And do your due diligence. See you tomorrow, the same place, the same time, to do things the same way that has proven consistency. Until then, take care. God bless. See you on the other side of profitability. Thank you.